The views and opinions of this program are those of the hosts, guests, and callers. There is substantial risk of loss in trading futures and options, which you should carefully consider prior to trading. Plenty of market minds are on location here at the Moving Iron Summit this year. One of those joins us now, Shawn Hackett with Hackett Financial Advisors. Shawn, great to connect with you. Been meaning to do so for a while. Thanks for joining us. Hope you're doing well.
I'm doing well and glad to be here at the Moving Iron Summit, and glad to be here with you. So.
Absolutely. Well, let's talk markets a little bit. And Election Day Tuesday, grains, I'd say firm, slightly higher. Livestock, kind of a mixed bag. Stocks are quietly optimistic. I guess quiet optimism really across the markets ahead of whatever we end up with an election result. Right, Shawn?
I think everyone's put their trades on. And so now they're just going to sit quietly today and to find out if they bet right or bet wrong. And then we could have some wild, volatility if some things could turn out a little differently than they've been trading. It seems that they've been trading a Trump victory in the markets. Obviously, if there's uncertainty who won or if she gets a clear victory, that could create a lot of volatility. So just have to keep an eye on the exit polls tonight and see what happens.
Yeah. But in terms of the grains, of course, export demand has been so strong ahead of the election. I think some of that's maybe been some of that uncertainty there. But yet, I think it's helped prop up corn and beans to some degree, especially the corn market. I mean, I know we're chewing through a ton of corn with harvest wrapping up, but still getting, these futures above the 100-day, getting back to around that 420 mark. Talk about this corn market specifically. Are you friendly corn right now, Shawn?
I am. Demand has continued to be strong. No question, there might be a little distortion, election effect, but Brazil had a terrible corn crop last year. Russia, Ukraine had a terrible corn crop this year. We're the only area or country that had a good corn crop, and we're priced to sell. And we haven't seen these kind of exports. You'd have to go back almost a decade to see this kind of level of exports. So the balance sheets that are out there from the USDA and others do not have enough demand, which means their ending stocks are going to keep coming down. And so a market that a lot of people thought was a 3.25 market just a few months back is now looking more like it could be a 4.5 to 4.75 market based upon better demand. And then we have to look at South American weather as we go into second crop corn in Brazil.
Absolutely. Well, I think on the flip side there, soybeans, there's been a little less optimism, I think, as Brazilian farmers have really caught up with planting. I mean, they're back on pace, essentially. It's for all the reports I've heard. And you got soybeans. I mean, Nove beans are knocking on the $10 door, but man, Shawn, I'm not seeing anything that's going to get us back above 10 necessarily. What's your thoughts there?
Even though they've caught up, just remember that they still planted a large percentage of the crop late.
Okay.
And the most important part of the production season isn't planting. It's the period from late November into the end of December when they're setting pods. It does look like a much drier, hotter pattern, at least for northern Brazil, is going to come back. Doesn't mean massive bull market, but can we go back and retest that mid-10s, upper 10s area like we did the last weather market that we had during planting season? I think the odds are favoring that we could do that.
It's kind of curious, too, as folks, they look at their marketing plan, they're wrapping up harvest here. Getting to the end of the year, we'll try to get some certainty on the geopolitical side, but I've used the term be nimble with your marketing right now. Would you agree with that?
Absolutely. You have to be very realistic about where you are, where you need to be, and anytime you have an opportunity to sell a rally that gives you a price that works on the farm, you need to get yourself caught up. Once you do, there's nothing wrong with putting a lock and key, throwing it in storage, and waiting for some better opportunities next year. But don't lose the foresight to get caught up to where you need to be to keep the farm going. I think nimble is a very good term here.
There's a lot of opportunity, right now, especially if you're looking at things like basis and forward contracting and looking at the spreads, et cetera, some of that carry that's still in the market here, specifically on row crops. I think there's plenty of opportunity right now if you have to make some moves.
Basis has actually been firming quite nicely here lately. that's an opportunity. No question, the carry is still giving you good opportunities to sell a better price if you have the ability to delay that sale a little bit. So yeah, I mean, I think there's a lot of things that you can do to mix and mingle and position yourself for when we maybe get that next rally, that can give you a better net cash price.
How about the livestock trade right now? Hogs have been on a tear. I think they maybe got a little overbought. We're seeing some of that, it feels like, early in this week. Cattle, been a couple weeks. It's been a little tougher. What's your take on the protein sector right now, Shawn?
We were constructive hogs. We've had a big move. I do think we're getting a little overdone. We have been suggesting being nimble, that hog producers use this opportunity to protect downside price risk, get some sales made. We think this is a good opportunity. We don't see the market running away yet. On the cattle side, listen, we've been stuck in a sideways trade since last fall. So the game is, you get to the upper end, you put some sales on, you get to the lower end of the range, you put some buys on, in terms of cash purchases and such. I don't really see us getting out of that trading range into the end of the year. Cattle on feed looks adequate.
Yeah.
And demand falls back when we go too high, and it comes back when we go too low. And so I think we're in balance, I guess, where I think we're at right now in the cattle market.
Has that maybe kept some folks in the cattle trade from maybe, waiting to put on some hedges and protect some downside potentially because they just keep seeing this market continue to chop around here?
When you have a market that gets quiet and goes sideways, you do get complacent. It's not going to stay that way forever. A bigger move is coming, either up or down. We have to be on move for that. But I would not lose sight of the fact that farmers have opportunities to sell profitable prices. Not everybody can say that all the time. Don't lose sight. Don't look a gift horse in the mouth too long. Make sure you keep your eye on the ball.
What about the dairy trade, too? I know you follow the dairy markets. That's been a volatile ride here, I feel like, all year long, Shawn.
Avian flu, took the U.S. by storm. A lot of speculation really spiked the market higher. But the USDA numbers, if you believe them, continue to show that production has been growing slowly, despite what seemed to be horrific issues with avian flu. And so if we can't knock production down with this kind of a situation and the avian flu starts to abate like it looks like it is, we might be overpriced here in dairy. And so we've already dropped in class 3 a couple of dollars down, and I think we might have more to go. We've been very strong in advocating that dairy producers put DRP under the market, get cash sales done through the first quarter. These prices are very, very good, and we're kind of worried that prices could work lower, given that it doesn't seem like we're getting the negative production outlook that we thought we were going to get.
Shawn, if folks want to talk with you there at Hackett Financial Advisors, how can they reach you?
2 places. One is our website at Hackett, Hackett, advisors.com. They can also go to our Twitter page at Faradex11. We put stuff on there from time to time about how we look at the markets to see if those listening to your show might find some value there.
Shawn Hackett, Hackett Financial Advisors, thanks for being with us here at the Moving Iron Summit. We appreciate it.
Thanks, Jesse. Always a blast.
Make sure to subscribe to the Market Talk YouTube channel. There, you can watch our latest interviews with the top market analysts in the country, find bonus content, and much more. Just go to youtube.com/markettalkag and hit the subscribe button, or you can search for Market Talk Ag on YouTube.